Welcome to Corofy, your trusted partner on the journey to becoming a licensed real estate professional in New York. Today, we've crafted a special guide to help you navigate through the complexities of the real estate exam with ease and confidence. Before we dive into our top 25 real estate questions designed to sharpen your skills and boost your exam readiness, please take a moment to like this video and subscribe to our channel for more invaluable resources and updates. Now, let's embark on this educational journey together. Before we get started, let's talk about taking your study to the next level. With our real estate exam prep course, you're not just studying, you're preparing to succeed. Our course offers comprehensive materials, practice tests, and personalized feedback to ensure you're not just ready, but fully equipped to ace your New York State real estate exam. And for a limited time, here's a special offer to boost your exam prep. Use the following code for a 20% discount. Don't just aim to pass. Excel with confidence and start your real estate career strong. Here are the 25 real estate questions that will sharpen your knowledge and prepare you for success.
Question 1. Riverview Apartments is a small complex containing 10 units that rent at $800 per month. Based on 75% occupancy, the effective gross rental income per year is A. $8,000, B. $72,000, C. $80,000, D. $100,000. The correct answer is B. 70,000. By calculating 75% occupancy for the 10 units, we find that 7.5 units are effectively rented out, leading to an annual income based on monthly rents multiplied over the year. Question 2. With a real estate investment, the earnings can be sheltered because the buildings and equipment can be A. exchanged, B. depreciated, C. eliminated, D. leased. The correct answer is B. depreciated. Depreciation allows real estate investors to reduce their taxable income, reflecting the decrease in value of the property over time due to wear and tear. Question 3. If tax-deductible expenses involved in a property are greater than the income, there will be, for tax purposes, A. negative cash flow, B. positive cash flow, C. increased debt service, D. greater income. The correct answer is A. negative cash flow. This situation indicates that the property is operating at a loss, which can affect the investor's overall financial health. Question 4. If an investor has a property that generates an annual income of $100,000, expenses total $25,000, and debt service equals $20,000, the property generates a cash flow of A. $20,000, B. $25,000, C. $55,000, D. $100,000. The correct answer is C. $55,000. The cash flow is determined by subtracting the total expenses and debt service from the annual income. Question 5. Which of the following is not a type of commercial lease? A. gross lease, B. net lease, C. percentage lease, D. proprietary lease. The correct answer is D. proprietary lease. This type of lease is associated with cooperative apartments and is not used in commercial real estate settings. Question 6. If the annual income for a property is $480,000 and the capitalization rate is 11%, the estimated property value is A. $12,290,000, B. $29,290,000, C. $4,363,836, D. $5,090,000. The correct answer is C. 4,336. This value is calculated by dividing the annual income by the capitalization rate. Question 7. An investor purchases a $3 million multifamily apartment complex with a $750 auction down payment. Each month, the cash flow from rentals, less expenses, is $30,000. What is the cash-on-cash return? A. 36%, B. 48%, C. 59%, D. 74%. The correct answer is B. 48%. This return rate is calculated by dividing the annual cash flow by the initial cash investment. Question 8. Which of the following leases do not have any changes in payment over the lease term? A. graduated lease, B. percentage lease, C. index lease, D. flat lease. The correct answer is D. flat lease. In a flat lease, payments remain constant throughout the term, providing predictability for both tenant and landlord. Question 9. Distressed property transactions would not include A. Deed in lieu of foreclosure, B. Sale-leaseback, C. Short sale, D. Foreclosure. The correct answer is B. Sale-leaseback. This is a financial transaction where one sells an asset and leases it back for the long term. It is not typically associated with distress situations. Question 10. A real estate investor may defer capital gains taxes by A. Investing in income shelters, B. Dealing in cash transactions only, C. Exchanging like-kind properties, D. Selling high-end properties over $500,000 because capital gains may be deferred. The correct answer is C. Exchanging like-kind properties. This is known as a 1031 exchange, allowing investors to defer capital gains taxes under specific conditions. Question 11. An economic analysis of all data related to a project, including its costs, rates of return, and benefit to the community, is known as AN. A. Operating statement, B. Feasibility study, C. Potential gross income, D. Pro forma schedule. The correct answer is B. A feasibility study. This type of study is crucial for assessing the viability of a project before committing resources. Question 12. Foreclosed properties are generally sold at A. A short sale, B. An auction, C. The time of listing, D. The request of the owner. The correct answer is B. An auction. This method is commonly used to recover the unpaid loan amount quickly. Question 13. An operating statement adjusted to reflect a potential change in income and expenses based on the investor's assessment of the real estate market is known as A. A feasibility study, B. Investment strategy, C. Timing planning, D. A pro forma schedule. The correct answer is D. A pro forma schedule. This document is used to project future financial performance based on current market trends. Question 14. Foreclosed properties are usually offered A. As is, B. By a lender, C. When the borrower is in default on the mortgage, D. All of the above. The correct answer is D. All of the above. This highlights the typical conditions under which foreclosed properties are sold. Question 15. The percentage of income that the investor realizes on an investment is known as A. Loan-to-value ratio, B. Rate of return, C. Leverage, D. Time value of money. The correct answer is B. Rate of return. This metric is essential for evaluating the profitability of an investment. Question 16. The study of how a change in one factor affecting a real estate investment can affect the income to the property is known as A. A feasibility study, B. Risk analysis, C. Sensitivity analysis, D. Securitization. The correct answer is C. Sensitivity analysis. This analysis helps investors understand the potential risks and rewards associated with changes in market conditions. Question 17. An investor purchases a $300,000 apartment complex with a $600,000 down payment. Each month, the cash flow from rentals, less expenses, is $20,000. Over a year's time, the cash-on-cash return would be A. 25%, B. 28%, C. 32%, D. 40%. The correct answer is D. 40%. This figure represents the annual return on the cash invested. Question 18. If a property generates a $10,000 cash flow and a $2,000 tax loss that is used to offset other income, the after-tax cash flow for an investor in the 35% tax bracket is A. $3,560, B. $4,200, C. $4,320, D. $5,490. The correct answer is B. $4,200. This calculation takes into account the tax savings from the loss. Question 19. A paper income loss on investment property that is sometimes desirable to property owners is known as A. Gross income, B. Debt service, C. Leverage, D. A tax shelter. The correct answer is D. A tax shelter. This strategy can be used to minimize taxable income and reduce tax liability. Question 20. What is the value estimate of a property, rounded, if the net operating income is $650,000, and the capitalization rate is 12%? A. $678,000, B. $4,678,000, C. $5,216,000, D. $5,416,667. The correct answer is D. $5,416,667. This value is determined by dividing the net operating income by the capitalization rate. Question 21. An operating statement adjusted to reflect a potential change in income and expenses based upon the investor's knowledge of the real estate market is called AN. A. Cash flow statement, B. Operating statement, C. Statement of net worth, D. Pro forma statement. The correct answer is D. A pro forma statement. This financial document is used to forecast future income and expenses. Question 22. The net monthly income of a 7-unit apartment building is $2,250. The capitalization rate the lender uses is 7%. What is the value of the building? A. $299,010, B. $385,714, C. $410,926, D. $450,509. The correct answer is B. $385,714. This valuation is based on the income approach, using the capitalization rate provided. Question 23. A process that calculates the value of an asset in the past, present, and future is called A. Leverage, B. Time value of money, C. Debt service, D. Net operating income. The correct answer is B. Time value of money. This concept is fundamental in finance and investment, reflecting the changing value of money over time. Question 24. If a business property has an asset value of $1,000 with a debt of $750,000, what is the debt ratio? A. 50%, B. 60%, C. 75%, D. 90%. The correct answer is C. 75%. This ratio is a measure of the amount of debt used to finance the asset. Question 25. The ratio of annual before-tax cash flow to the total amount of cash invested, expressed as a percentage, is called the A. Capitalization rate, B. Rate of return, C. Income-expense ratio, D. Cash-on-cash return. The correct answer is D. Cash-on-cash return. This metric helps investors evaluate the performance of their investment relative to the cash they have invested.
Thank you for joining us for this educational session. Before we wrap up, let's consider how you can elevate your exam preparation even further. With our real estate exam prep course, your study becomes a pathway to success. And now, for a limited time, we're making this journey more accessible for you. Use the following code at checkout to receive a 20% discount on our exam prep course. This is your chance not just to pass, but to excel with confidence and begin your real estate career on solid ground. Don't forget to share this video with friends who are also on their journey to becoming real estate professionals. Subscribe to our channel for more practice tests and resources to ensure your success. We're committed to helping you pass your real estate exam with flying colors. See you in the next video.